How do you plan for your inheritance tax in the UK? Today, I'll be giving my top 5 tips on how to work on that. Guys, if you've been watching the channel, you think the content's good, the very best thing you can do is say thank you for all the time and effort. This free content is to hit the subscribe button below. It'll let you know when our new videos are here, but more importantly for us as a team, it's the biggest thank you can give for us, as it will let YouTube know we're doing good content and grow and show to more people. So, the first one on my list is calculate the value of your estate. There's no point worrying about inheritance tax if it's not applicable to you. So know what the value of your estate is and know what assets will and won't be included inside your estate. For example, UK pension pots, defined benefit, defined contribution, whatever it is, currently do not form part of your estate. But you need to know, I would say have a spreadsheet per annum which shows your exact net worth and which of those assets would be applicable to inheritance tax in the UK. If you need help with this, it's something that your financial advisor should be doing for you as part of your fact-finding exercise as well. Now, next you need to know what are your inheritance tax allowances and reliefs. So basic information, £325,000 per individual, £650,000 per couple. Few people know about the 7-year rule though, and obviously how it drops off over the course of 7 years, and it's basically inheritance tax free after the course of 7 years. And the other funny thing is people say, oh, well, if I die within 7 years, I might have to pay this tax at a staggered rate. But it's like, but you would have paid that anyway. By doing nothing right now and having the money sit in your estate, it's going to be 40%. So in the first couple of years, there isn't any redemption. You basically pay 40% within the first couple of years or so of the 7 years, but you should be doing something rather than nothing, in my professional opinion, for inheritance tax, unless you're happy for the UK government to take 40% of the wealth that you've accumulated. Next on my list is having a will and keeping it updated. It's extremely important when you're talking about inheritance tax. You're not going to be here if you're talking about your money. Your partner might not be here if you're talking about their money. It's the beneficiaries that are going to deal with this. It's the beneficiaries that are going to have to go through probate in the UK in order to go through your estate and make sure that they can actually access the capital and it can be reallocated to who it's supposed to go to. So having your will up to date, and I would say even going one step further than that. I know a lot of people are a bit conservative. It's a British thing, right? We don't really like to share how much money we have, and potentially maybe some people think, oh, if I let my kids know what they're going to get, it could cause arguments, or maybe they won't work as hard in life and maybe they should have to work hard, whatever it might be. I would try to get rid of all of that, because you're not going to care about that when you're on your deathbed. I can tell you now. What you are going to care about is knowing your loved ones, your beneficiaries, have a clear plan of action as what's happening on your estate. I have unfortunately been in the situation where many of my clients have had to deal with their partner's finances without having a clear will in place, and that is what can lead to massive family disputes and arguments that can quite literally tear families apart. I've seen it happen before. Money is the one thing that changes people, and if there's not a clear outline of what's going to happen with the money, who's going to get what, it can lead to big problems. But moreover, it can just make the whole process so much more efficient. If you bring your kids into the conversation, it's really important. This is something I actually encourage of all of my clients. If you have a financial advisor already, or you're considering to work with us, once you've done the initial work and you feel comfortable, bring your kids into the conversation, bring your wife, bring your husband, bring your spouse. Let them come and understand what your financial planning is, because this will allow your financial advisor to have a clear communication with your kids so they know what the plan is when something happens to you, which it will. Unfortunately, we have to be morbid. Another way you can mitigate it, or a key thing to think about, is pension planning. Okay. If you currently have UK-sourced income, or you're allowed to contribute to a pension pot, the UK annual allowance at the moment you can contribute is £60,000. You can also use carry forward from £60,000 the year before, £40,000 and £40,000 from the previous 2 years before that. That's a very large amount of money that you could potentially get out of your estate and into a UK pension pot, such as a SIPP, to avoid UK inheritance tax. Now, I did a video just a couple of minutes ago about Labour government. Will Labour potentially be looking to change inheritance tax rules on pension pots? It's speculation. No one knows the answer to that. But again, you have to do what is legal and what is correct at the time of writing. Right now, UK pension pots are free from inheritance tax, so take advantage of it, in my professional opinion. And lastly, there are other ways in terms of protecting yourself from inheritance tax, discretionary trust, all sorts of topics that you can do. However, my advice to clients would always be go through a slow and thorough process with your financial advisor. Things such as gifting cost you nothing. They make financial advisors nothing. There's no assets under management. Although potentially if you gifted the money to your kids and your grandkids, maybe the financial advisor could take over and set up a JISA for them, or set up an ISA, or set up a pension pot, or whatever it might be to help them saving. But generally speaking, gifting is one of the cheapest ways to pass on your assets from an inheritance tax perspective. This is something we're working a lot on here at the moment at Cameron James. If you want to have a conversation, reach out and book in. You'll have a free discovery meeting to understand your situation in more detail. Any information or reports that we put together for you will obviously be free of charge for you to understand exactly what we recommend before you wish to potentially implement any of the solutions or use the providers that we recommend. As always, take care of UK pension assets, and if you have any questions, please let me know.